Hello, everyone. Pat Smeeta here with your Thursday, April the 10th interest rate update. We've gone through a lot of volatility, so we'll try to break it down for you as we talk about this. We got the consumer price index that came in today. Month over month and year over year, we're actually lower, as you can tell. We went from 0.2% to negative 0.1% on a month over month basis, and a 2.8% to 2.4% on a year to year basis, which is great. At the same time, if we take consumer price index without food and energy, we're actually lower again, where we went down from zero point 0.2 to 0.1% and on a monthly basis, and 3.1 to 2.8% on a annual basis. Now, normally this would have been great. However, we've seen so much volatility with the tariffs that people aren't really paying attention to that as they are the news cycle coming from the White House. At the same time, GDP now has been updated. We see that the update that was issued most recently today shows that GDP was actually came in a little bit higher. It's going to be, instead of a decline of 3.7%, we're going to see a decline of 2.4% on a normal GDP basis. And a gold adjusted, we're going from negative 1.4% to negative 0.3%. However, we are still negative. And it's very important because the Fed is going to have to pay attention to this for their mandate of keeping the economy going. So we're looking good for the reduction of interest rates. At the same time, we normally don't show the Dow Jones Industrial Average, but we have to show it now because it's having an effect on interest rates. As you see right here, the Dow is down today 1,000 points, but it's down from its all-time high of 45,000. We're at 39,000. We bottomed out at 38,000 yesterday, and we could be headed down even further, which will really make the Fed look to make sure that the economy is being driven. So this is another aspect because when people look at their stock accounts and they see money, they're more apt to spend because they feel richer. If they're lower, if people start looking at their 401k and the IRAs and they're lower, they're going to be less apt to spend. So the Fed is definitely going to be paying attention to this to see how their monetary policy will evolve. At the same time, we had a terrible day on the markets. Unfortunately, interest rates went higher. We saw that the 10-year, that the mortgage-backed securities were down 48%. We're breaking new levels. As you can see right here, we are just going down the pipe. Every day, almost, we've had lower interest rates. We've had higher interest rates as the mortgage-backed securities went lower. Same thing we're seeing on the 10-year bond yields, where bond yields are going higher, which means interest rates are going higher. No way to sugarcoat this. Interest rates are higher, and you might see some of your buyers slowing down in their purchases. If you like what you see, follow us, like the video, comment, and share with your partners. Thank you.